Okay, let's just completely dismantle this massive misconception that you need thousands and thousands of dollars to even begin your investing journey. Today, we're diving into an explainer of a really fascinating blueprint that pretty much challenges everything we've ever been taught about wealth building. The source material we're exploring today completely flips the script. It argues that starting small isn't a disadvantage at all. In fact, it's actually a vital, absolutely crucial step for building a long-term financial identity. I want you to literally picture a standard, crisp $100 bill. Just hold that image in your head because our source material reveals that this seemingly small, almost insignificant amount is actually the ultimate catalyst for change. The author shares this super relatable scenario, right? You've got a little extra cash and you're debating whether to just spend it on a nice dinner out. But then the realization hits. If you don't start investing now, when are you ever going to? That $100 is literally all it takes to break the cycle of procrastination. And of course, right on cue, here comes the resistance. Your brain immediately goes, wait, what is $100 actually going to do in the stock market? It's the very first doubt that creeps into a beginner's mind, and it keeps so many potential investors totally paralyzed, just sitting on the sidelines waiting for the perfect time. We look at these massive trillion-dollar companies and assume our tiny contribution won't make a ripple. But honestly, this specific doubt is exactly the trap that keeps people from securing their future. So here's the thing you have to understand. Investing your first $100 isn't about making a massive immediate profit. It's just not. It's about a fundamental psychological shift. It's about proving to yourself that you are, in fact, an investor. The truth is, investing isn't about that initial chunk of capital at all. It's about building the habit. The very moment you cross that starting line, you become someone who invests. And that identity shift, that changes absolutely everything. All right, let's move right into section 1. Tools for modern beginners. Because once you get past that mental hurdle, the actual physical mechanics of getting started are easier today than they have ever been. What's amazing about investing today is that there are no suits, no traditional brokers, and absolutely no gatekeeping. You literally just download a popular app, like Robinhood or Fidelity, you link your bank account, and boom, you're ready to go. There's no intimidating sit-down meeting with a financial advisor required. The barrier to entry hasn't just been lowered, it's basically been erased entirely. Now, there is one common stumbling block people run into. You open the app and you see stock prices sitting at $3, $4, or maybe even $500 for a single share. This is where fractional shares come in, and they are a total game changer. They allow you to buy just a small piece of a single company stock instead of paying for the whole expensive share. This one feature completely levels the playing field. Think of it like this. You don't need enough money to buy the whole pie anymore. Even if a company stock is incredibly expensive, you can just grab a $10 or $20 slice and get your foot in the door immediately. Our source points out a really huge aha moment here. You don't actually need more money to begin. You just need to utilize the money you do have. Fractional shares make literally every company accessible to you. So that brings us to section 2, the simple ETF strategy. You have the app, you have the $100, but where does that money actually go so you don't fall into the classic beginner trap of trying to pick individual stocks? The source material suggests a much steadier approach, the exchange-traded fund, or ETF. If you're not familiar, an ETF is simply a basket of investments. It allows you to buy into hundreds of different companies all at once. So instead of making this really risky bet on a single company and just crossing your fingers that they don't have a massive product failure, you use these funds to spread your money across the entire market, which instantly diversifies your investment. Look, betting on one company is a gamble, but tracking the top 500 companies, now that is a strategy. Our source specifically highlights really simple, straightforward funds like Vanguard's S&P 500 ETF, known as VOO, or SPDR SPY. By choosing these, your investment simply grows alongside the broader US economy. As the author frankly admits, it's simple, it's boring, and honestly, that is exactly what makes it so powerful.
Okay, moving on to section 3, consistency and market depths. Because once you've made that initial leap, the whole narrative shifts away from just starting and moves toward mastering your own emotional discipline. The real, true secret to this $100 blueprint isn't dropping in a massive lump sum, it's what happens after that. It's tossing in $10 here, maybe $20 there. It's taking that money you might have blown on takeout and funneling it right into your app instead. It's all about building consistent, small additions until they form an unstoppable habit. The compounding effect of this consistency over time is really where the magic happens.
This quote from the author just hits the nail on the head. They write, "We don't fail in investing because we start small. We fail because we stop." It's such a profound point. Consistency is always going to beat your initial starting capital. Think about it. If someone with $10,000 panics and completely stops contributing, the person who started with just $100 but keeps adding $20 a week is ultimately going to win out in the end. And let's be real, at some point, the market is going to dip. Your $100 might temporarily turn into $90. The immediate emotional impulse is always to panic and pull your money out. But you have to remember, the market going down isn't a failure. It is completely normal. It's literally built into the process. The only actual mistake you can make during a dip is quitting too early. Maintaining that emotional discipline to just stay the course is absolutely vital.
So look, that first $100, no, it's not going to make you rich overnight, but it does something monumentally important. It gets you in the game to learn, grow, and actually build your future security. You start to realize that perfection is the enemy of progress and that you are totally allowed to start messy. Looking at the sheer accessibility of these modern tools today, I want to leave you with this final, incredibly important question to answer for yourself. What is actually stopping you from starting right now?